as stocks are right near record highs, driven in part by the boom in AI names. Nvidia, which is a pure play AI company, is set to announce its quarterly results after the close today. And joining me now with more is Gil Luria, Managing Director and Research Analyst at D.A. Davidson. Gil, always great to have you on the show here. What are you watching as Nvidia prepares to report?
Well, Nvidia is going to report a great result. We know that because they have a handful of large customers that said that they're all increasing their data center spend, which means that at this point buying a lot more Nvidia GPUs. So what we're going to be listening for is more comments on the longevity. Is there a backlog? Can they talk about 2025? What are they going to say about next quarter is going to be the most important takeaway from this earnings report.
Mm-hmm. Can the momentum behind Nvidia continue? I've heard some reports saying that Nvidia is set to slow down in terms of what it can produce and its leadership over time.
Over time, yes, not today, not this year. We know that because Microsoft, Amazon, Google, Meta, Tesla have said that this year they're increasing their CapEx and especially increasing their CapEx on data centers. So those are all orders that are going to come in this year for NVIDIA's existing set of products as well as the new product. So a disappointment today is less likely. The key to NVIDIA is what's going to happen next year, what's going to happen the year after that. At what point does Microsoft say, we have enough data centers, we have enough GPUs, we can train all the biggest possible models, we don't need to buy anymore? That's the question. We're not going to have a lot of that today. Today we're going to have a great result and likely good guidance into next quarter.
Interesting. So presumably, Gil, as someone who also follows the stock price, you that is, I would assume that would be a positive for shares. What do you think?
It's likely if numbers go up that the stock price will go up. So that's true, and that's a reason to be excited. What I wouldn't take away from that, though, is a read through to the rest of the market. I know everybody's hanging on to this report to tell us something about the state of AI in general and the rest of the market. I'm not sure I understand that connection. All NVIDIA is doing is literally selling to those handful of companies that I mentioned before, as those companies do a land grab into AI well ahead of demand. They're committing to buying data centers way more than they need to right now because they want to make sure they have an insurmountable lead. That really relates to that small group of companies. It doesn't necessarily extend beyond that. So not sure that the excitement from NVIDIA should or will flow to the rest of the market, but we'll be a little wiser on that tonight and tomorrow.
Interesting, Gil. So what would the takeaways from these results mean? Maybe they're not going to impact the broader market, as you mentioned, but I know a lot of traders down here on Wall Street certainly are focused on these results.
So they're going to mean a lot to NVIDIA. They're going to mean a lot to the rate that Microsoft, Amazon, Google especially can build up this capability around AI. There's a lot of new frontier models that need to be trained. There's a lot of new tools that are being developed that need to be trained. And those are the important customers for NVIDIA. And so it's really important for Amazon to get NVIDIA GPUs, to make their own GPUs so they can catch up to Microsoft's lead in AI. Let's not forget AWS, Amazon's AWS is bigger than Azure, and yet Azure has taken a lot more mind share and market share in delivering generative AI capabilities. So we're going to look to see how much Amazon can build up its pipeline of GPUs, data center capacity, and products to see if they can catch up to Microsoft, and we believe they can.
Interesting. And how does Alphabet fit into this race as well?
Well, they're a distant third right now. So they're doing well in the Google Cloud business, but they are at a lag to Microsoft. They have been for the last year and a half in a lot of different fronts, including being able to deliver AI capabilities through their own data centers. They have an opportunity to catch up too. As they get more NVIDIA GPU capacity, as they make more of their own chips, they'll be able to catch up as well. But they were already the third largest player in the hyperscaler business. and yet they're a step behind on this part of the race as well. So right now it looks like Amazon is in the best shape. Microsoft should be able to sustain its lead. Google has a lot of catching up to do.
Gil, as someone who follows this industry very closely, what do you see as the applications of artificial intelligence that will be used at scale?
I think in the short term, the real focus should be on AI assistants and how those are going to start coming to be. Microsoft talked a lot about that this week as they start selling AI PCs. So PCs that know everything that there is to know about you because they're the ones you use for everything and can help you carry out tasks. We're going to hear more about that a couple of weeks from now at the Worldwide Developer Conference from Apple. They're going to have some of these assistant-like capabilities built into the phone. So think about the fact that our phones know almost everything about us. So we can ask the phone or the assistant on a phone to carry out some specific tasks, whether personal or professional. And that's probably the next big wave of applications that'll capture people's imagination.
What are your takeaways, Gil, from the other technology results that we've heard so far earlier this season?
They've been lackluster. Hence my point about the fact that we shouldn't read too much from a great Nvidia result to the rest of the market. Most of the companies selling technology and software to the enterprise customer reported pretty lackadaisical results. They guided conservatively to the year, and as they reported their first quarter, that guidance did not go up. The expectations are still for this to be somewhat of a lackluster year for many software companies. And if the expectation is that AI is going to drive big upside for them, that expectation may not get fulfilled. There's some great software companies out there doing great things, but revenue acceleration right now is very hard to find.
Interesting. Are there any other AI stocks that you think could be attractive for investors?
Yeah, so another one's reporting today. That's Snowflake. So as we use more AI on AWS and Azure and Google Cloud, we need to store more analytical data. Snowflake does that. We need to monitor the AI applications. Dynatrace does that, ticker DT. And we need to build the code for it and maintain it in binary form. JFrog, F-R-O-G, does that. So there's other ways to play AI that are durable and will continue to grow over the next few years that don't bet on a particular hardware type and cycle in the short term.
All right, it's going to be a busy afternoon to say the least. Thanks as always, Gil Luria, for joining. Gil's the Managing Director and Research Analyst at D.A. Davidson.